So the Roundtable created obviously to provide a platform for private and public sectors to explore ways to mitigate against the risks of doing business on the continent. What are the chief risks that present itself from your perspective?
Well, as you know, Africa is a continent where there's a lot of opportunities, but most investors are quite wary of the risks in Africa. They believe that the investments are not safe when they invest in Africa, but though the returns are high, well, obviously, there are a lot of opportunities here, and investments like, for instance, in the energy sector. I think we've started seeing that because most countries are trying to develop green energies and also try to diversify, the areas of production of electricity. Of course, there are investments, investments in Africa cuts across. We have investments in tourism industry where investors from overseas are coming in to build hotels. We have investors who want to be involved also in infrastructure development. So all those are kind of the risks which we try to make investors feel more comfortable when they want to do business in Africa.
Let's look at what one would assume would be a chief risk, and that is political risk. I mean, there are no less than 17 African countries facing national elections this year, and we've seen the Arab and North African countries experience unprecedented political turmoil as well. How has that impacted on the entire continent's risk profile?
Well, I think, you're right. What's happening currently in North Africa, well, started sometime in December and continued. Of course, it's still happening in Libya at the moment. Has actually changed the African risk profile completely because early, at the end of last year, before this, the Jasmine revolution started, I think Africa was seen, the Sub-Saharan Africa was seen more as a risky part of Africa than the North Africa, for instance, because if you look at the political risk map of Africa, those countries in North Africa were all lighter in color than there's other countries like DRC, Kenya, for instance, and other countries in Africa. But after this revolution, investors now feel that the real African risk profile has changed. It's not only in countries where they were perceived as the risky, but even countries which were quite stable have now gone through this revolution. So I think the risk profile has changed, and I believe maybe in a way it also is a wake-up call for governments which were not too democratic earlier on to be more democratic now.
Having said that, many say that when it comes to, the continent's perceived risks, we've got investors having become a lot more discerning when it comes to the continent, not necessarily seeing the continent as one homogenous entity. Having said that, we've got regional integration in play. So we've got pull and push factors simultaneously at play here. How do you see regional integration affecting that balance of scale?
Well, I think, Africa, is a bit unlucky compared, of course, to the US or other continents, or even Europe, where now it's more or less like a one continent. But Africa also, in a way, we are moving in the right direction. As you know, regional integration is taking place, particularly in East Africa, where, that's happened, of course, in the COMESA region. And of course, the SADC also. And this is supposed to be going to be a grand free trade area between the three blocks, and that, of course, will increase the number of population by almost, we're talking about 500 to 600 million people, which is over half the population of Africa. So if all these people can trade together and, barriers are broken, obviously there's going to be more happening within the region. Mm-hmm. Of course, we hope that this will extend to ECOWAS and, coming through, and the other regional blocks coming together to at least get the whole of Africa integrated, in which case we'll be talking about 1 billion people doing business together and to each other. And that, of course, gives a bigger market compared to what's currently happening, where each country is not trading with the other, or they have bilateral trades only rather than regional trade.
Of course, this year marks the second year of the event. What do you think is going to stand out this year, and what was achieved last year that you're actually carrying forward?
Well, this event this year is historic in the sense, I mean, well, ATI as a company, you know, because we know we were formed by the African governments, you know, initially COMESA, to take care of political and credit risk, trade risk in Africa, and you know, our primary business is political risk. Well, what has happened in North Africa, you know, at the moment is bringing a new profile on the political risk landscape in Africa, and you know, for us at ATI, this is the 10th year after it was formation, so we're celebrating our 10th anniversary, you know, around next week. So this is historic in a way, and we believe, you know, we are going to witness, you know, more interest in what we do, you know, in the region than you know, we have in the past, because we are not quite investors who invest in Africa. Most of them were not aware that you know, there's risk mitigation tools, you know, to take care of their risk in Africa, and we believe that this is a forum which will reach the target clientele who will be able to use our products and make Africa safer and investment destination.